All right, brothers and sisters of Accounting 201. It's Brother Lewis for Tuesday office hours. I've been asked to go over the final exam, how to prep for that. I've also been asked some questions about the financial statement analysis work. I've already done a video on that for the first question of the three, but I'll review that a little bit more just to make sure some of the nuances of how to approach it will be addressed. And then lastly, if I have enough time, I'll go over exam 4, top 10 misses, see if I can clarify any issues that may have been, may have surfaced during that exam. So why don't we go ahead and get started? I did want to make sure that everybody knows or remembers that in this announcement, the week 13 preface, there is a playlist, all right? It has quite a few videos in it to help you out. There's an exam review playlist as well that's out there that'll help you. You can go back to, exam 1, 2, 3, some of the top missed questions. You can look at that. I also have some other videos just generally related to exam prep. And then this one will be in there as well to make sure you have a central location to kind of glean some exam prep related videos. And then lastly, this document right here, the Accounting 201 exam review, has not only the exam reviews for the prior exams, but also the final exam. And so I'm going to go over that right now. Make sure you download that if you need to go over it. Okay. It's actually called exam 5. It's the last exam. It is a 60 multiple choice or completion question type of an exam. It is to assess everything for the whole semester, including chapters 9 and 10 that you just completed. So you'll have, some section of it that's just for 9 and 10, usually about of the 60 questions, I think there's about probably 10 to 15 associated with chapters 9 and 10. And then the rest of it is all associated with the other chapters. If you think of it, there's how many chapters? There's a total of 13 chapters, I think, right? Is it 10? It's 12 or 13 chapters. So you're looking at roughly 5 questions per chapter. And this guide here that is produced tries to point you in the right direction in terms of what is going to be asked. All right. So I would recommend that you go through this as a first pass and understand what's going to be kind of the key components from each of the chapters that is going to be tested. Now, in chapter 1, its primary focus is on the 4 financial statements, right? That's kind of the core thing. What is the end result? What are we driving towards? And that's financials. And that's going to be your balance sheet, your income statement, your statement of cash flows, and then your statement of retained earnings, right? And understanding which accounts end up showing up in those, right? So your income statement is going to be mostly about revenues and expenses. Why is my thing going so slow? My mouse isn't moving very fast. So revenue and expenses, right? Those are going to be the primary things on the income statement. And this goes through kind of a discussion of some of the main concepts that you're going to want to understand associated with that. Let me do this. Then on the balance sheet, you're going to have assets, liabilities, and equity, right? Those major components of a balance sheet, and you're going to need to understand which accounts typically follow, well, not just typically, always show up either on the asset side, the liability side, or the equity side. Okay, so you'll definitely want to make sure you understand accounts as they relate to the individual financial statements, and you'll also want to review as we get down into like chapter 2, what's a normal balance, right? Or what the normal credit balance and normal debit balance. If you're still kind of fuzzy on that, you're going to want to make sure you understand this because it's going to test you a couple times on these types of accounts. What increases an account? Does a debit increase the account or does a credit increase the account? You'll need to understand which one increases accounts and decreases accounts. Okay, and that's where you get back into your normal balance, your rules of the normal balance. Now this has it kind of laid out for you already, right? It's pretty straightforward. It's an asset, almost always it's a debit, normal debit balance. If it's a dividend, it's a normal debit balance. If it's an expense, it's a normal debit balance. Anything else is a normal credit balance. So you got liabilities, common stock, and revenues, right? So this gives you a nice little visualization of what ends up being a normal debit or normal credit balance. But you also have to make sure that you kind of think about what are those contra accounts that might be just the opposite. Now, dividends is a contra equity account, whereas like let's say depreciation is going to be a contra asset account, right? So there's a couple of contra accounts in here that you're going to sneak in and you want to make sure that you're aware of. You also want to make sure that you understand this journaling process. Now, some of you have had a difficult time with this when you think about like the ethics assignments, right? Actually having to write down the journal entries and how you have an account, you have a debit and a credit, and understanding how these things actually get recorded into the books has been a little bit of a challenge for you. So you want to make sure you look at these journals, and especially when you go into like, let me go over here to McGraw-Hill real quick. And I had this one open, but let's just duplicate this for a second. Go back to the home. In these these cheat sheet that they have available, watch the ebook, see if I can find it real quick. A lot of one thing, just as a side note, I guess, is I'm getting diverted quickly, like on chapters. Let's go to chapter 9 real quick. Chapter 9, and let's go down to where is it at? It's the cheat sheet, right? Every chapter has a cheat sheet. These are the journals, right? And you need to really understand what accounts are impacted by like sales tax collection or unearned revenues, right? Some of these will have been replicated a couple different times, but it's important to understand, like, a note, which is a liability, what happens when you pay it? What accounts do you debit and what accounts do you credit? And in these cheat sheets, you could do a quick review for the exam, go through each of the cheat sheets, these chapters, and just kind of familiarize yourself with these journal entries and some of the other topics that are in here. These are going to be just as helpful as this other guide. All right, so journaling is going to be tested a couple of times throughout the whole exam. I would expect anywhere from 10, maybe 15 different types of journal entry type problems you're going to have to figure out. And it may be conceptual type journal entry things. And so you're going to want to open up your Excel file, right? Like I've done time and time again in these videos, and you're going to want to actually play it out visually on a screen, right? So you're going to pull up your Excel file. You're going to, maybe you keep this over and over and over, right? You're going to have a date. You may have a reference. You have an account. You have a debit and you have a credit. I mean, that is the basic starting point for every journal entry. Some may or may not need a reference. So, that sometimes you can get rid of this one, but every one is going to be like this. And so you might as well, when you're trying to work through the solution to some of these problems, don't let it just happen in your head. Actually put it down on paper, because you'll be able to see, okay, well, what, digital paper, you'll be able to see, right, whether or not what the problem is, you accidentally did a debit versus a credit. How does that impact the account, right? You can not only have your journal entry here, but then you can have, let's say, a cash T account, right? And you can do your T accounts here, draw them up, replicate them a couple times, do one for a normal debit balance, do one for a normal credit balance, right? This would be my quick and dirty way of putting together at least a couple of templates So I'd have one for cash, like an asset one. And let's say I'd have one for a liability, like let's call it accounts payable, right? And then all I could do really simply is just sum this side. This is my normal debit balance side type of an entry. Oh, why did it do that? That was weird. Whoa, let's go backwards. Why did I do that? So let me do this again. Minus, oh yeah, the sum. That's why I did it. So, I can create this entry. That's fine. And then I can create one, that's the normal credit balance one. And then I'm all set to go for any time that I have a T account type of a question or a journal type of a question or a normal credit versus normal debit balance kind of question. I have not only my journal entry all ready to go, but I also have my T accounts ready to go, and I can just populate them, right? And see what the impacts are to the balances and do some calculations based on that. So you're definitely going to want to have Excel up and going and have a couple of templates just ready to go. Just, your journal is going to be there. Your T account is going to be there. So just go ahead and get it in there. All right. Definitely how to prepare these financial statements is going to come up from time to time. Company name, name of statement, date, what type of date, range or date, and then how the income statements come together. Right. On 3, oh, what's 3? So okay, so this is going to be mainly conceptual about your principles, your revenue recognition principles, your expense recognition principles, really your accrual method of accounting versus cash accounting. What's the difference between that? Rules about adjusting entries, right? And so this will help you kind of work through some of these accrual and adjusting entry type concepts. Just kind of make sure you get a top level view of what to do there. Now, let's see. Definitely steps in the accounting cycle, right? Recognizing each of the different parts of what you need to do in that process. And if we actually go to chapter 3, why don't we go to that real quick? I bet you even has it in the cheat sheet. Chapter 3, we go to the cheat sheet here, right? You have your deferrals, your accruals. It has your different types of financial statements and how they relate to each other. It has your closing process. And does it have your different, no, it doesn't. Interesting. This cheat sheet doesn't necessarily show the process of the accounting where you identify, you analyze, you record. Let's see if we can find it actually in this file, just in case it comes up as a question. Accrued revenue, deferrals, the accounting period, accrual versus cash, recognizing framework of adjustments. I don't see it in here. This would be one of those ones that I probably trip up as well. So let's just see if we can figure this out. You have your process, cash versus accrual, revenue recognition, expense recognition principles. And that's pretty much it in chapter 3. Deferring, this just goes into more detail, more detail, more detail, and more detail on each of these. Adjusting balances, the closing process, recording entries. Okay, well, I guess that's the homework for me to see if I can find what those components are that it's addressing here. What are the steps of the accounting cycle? And see if we can just Google it real quick, see if I can find something that's worthwhile to show. And that way, at least it's here. Images. Accounting cycle. There's a simplified one around here somewhere. Identify transactions, record them, post them, prepare journal entries, make adjustments. Yeah, this is probably good enough right there. You identify the transaction, record it, you post the entries to the journal entry, prepare an unadjusted trial balance, look for reasons for the balances, make adjustments, create the financial statements, and close your books. That's a pretty good summary of it. Let's see if there's a better one. Oops. Accounting cycle. I'm sure it's in McGraw-Hill somewhere, but it's just easier instead of hunting and pecking there to come here. No, I think it's this one's also very close to where you collect and analyze the let me pull this up. Collect and analyze the information, journalize the transaction. You post those to the general ledger, prepare your trial balance, prepare your financial statements, and record any adjusting entries. Close your accounts. So there's a couple different takes on this. Just wondering, maybe I can find a better one in the back in McGraw-Hill. Let's try that. Close. Let's see if we can do a little search and find it in here. Searching content, steps of the accounting cycle. List the following steps in their proper order. That's interesting. Quick study. Okay, so these are the steps, right? So it's asking to put them in the right order. So let's go here, P6. Closing process. This is just one part of it, though. So it's all part of P6, preparing closing entries. That's interesting. That didn't show. Let's search that again, see if there's adjusting and closing. Quick study, it only shows up there. Let's just do the accounting cycle. Accounting cycle right here. Accounting cycle is in 105. Can we go directly to 105? 105. Let's just try 3 is what? That's not far enough. Sorry that I'm kind of monkeying around here. How do you get to a specific page? Nope. Where is 105? Reporting and analyzing. That's not going to help me out. Accounting cycle. Accounting cycle. Steps in the accounting cycle. There we go. I found it. Magic. Okay. Where is this at? This is on page 59, the accounting cycle. So analyze the transactions, journalize, post, prepare unadjusted trial balance, adjust and post accounts, prepare adjusted trial balance, prepare financial statements, close, and prepare your post-closing. So this cycle on page 59 is what you're going to want to make sure you have a sense for, okay? Probably these last ones are going to be kind of easy because you have a trial balance, prepare your financial, let's see, your unadjusted trial balance. I think pretty much 4 through 9 should be pretty straightforward because you have an unadjusted trial balance, you adjust it, you prepare an adjusted trial balance. From that, you do the financial statements, you close your accounts, and you prepare a post-closing trial balance. So you really have 3 trial balances with a couple of steps in between. The first part is analyze, journal, and post, right? So maybe if you look at it that way, you'll be able to get through it okay. So that's chapter 3, right? Now in chapter 4, then you're going to go, what's the difference between a multi-step versus a single step? And obviously the multi-step is going to be large because it's going to go through different aspects of the income statement and put subtotals by them pretty much, right? Whereas a single step is pretty much just revenues less expenses equals net income, right? So most businesses actually follow a multi-step income statement. Very few do a single step because it just doesn't provide enough detail for you to make sense of how things are rolling up. You want to figure out net sales, gross profit, sales. Remind yourself of those calculations. Definitely want to make sure you understand what's in inventory, right? What's the total cost of goods available for sale and cost of goods sold. Make sure you understand that you start at the beginning, purchases, freight in, your returns and allowances out, your discounts for your total cost of goods available for sale. Subtract out your inventory, and then you got your cost of goods sold. So there's a couple of videos I've done before on that process. Okay, and they definitely refer you to the cheat sheet in chapter 4 for this review of chapter 4. They'll go through several examples, right, of how to do the work, provide a solution, and there you go. Now chapter 5 is going to be more. It's going to be a good old inventory valuation. Now, these you'll definitely want to make sure you go back to, okay, well, how do I create a first in, first out, last in, last out type of worksheet, right? And so you're going to always remember starting with like a date, what would you call it? Like a description. You're going to have a quantity, you're going to have a price, and you're going to have a total, right? And this is going to be where you start out with description. And then you're going to have to create, the easiest way is to create your quantity times price type of a deal. And that gives you everything that kind of basically came in. And I usually call this inventory in. Then I look at my inventory out, right? Inventory out. And I just create the same thing here where I'm taking this set of things, my quantity, my price, come up with a total that work out, inventory out. And then you want to make sure that you're coming up with what's remaining, right? Which effectively ends up being your ending inventory. So you might call this remaining inventory. I can't remember exactly how I've done it in the past, but in this one, I would take this, copy it over, and then I would just do the quantities as what was originally there minus what I sent. And then I can at least come up with the total, and the price is just going to be the same as the original price here, right? You can do the same with this one, equals that one. So then all you have to do after you've done all your work, prepping it, you have your totals, then you can do your first in, first out, last in, first out, specific identification, or weighted average calculations, right? So, but you have to have an initial starting point, a template to work with, and something like this will help you out. But definitely make sure you understand this process again. Also remember freight in, your free on board origin or destination type of approaches, who owns what, when, and when do you record it? Depending on what side of the coin you're at. If you're the shipper, you have one way of recording it. If you're the buyer, you have another way of recording it. Usually those transactions, AP, AR, let's see, if you're the buyer, it's going to be an AP issue. If you're the seller, it's going to be an AR type of a transaction, right? So you have to remember what these transactions look like on both sides of the coin and be able to work through that. This will help you through most of that, right? And show you methodologies for taking care of the overall inventory valuation. Chapter 6 is going to be a little bit easier. You can go into internal controls. this is going to talk a lot about bank reconciliations, right? And you're definitely going to want to make sure you beef back up on bank reconciliations. Probably, you know, one of the most difficult components of accounting, no matter who you are, is bank reconciliations, because it's so detailed in nature that you have to remember that you have, you know, what impacts your bank balance versus what impacts your book balances, and make sure you understand, you know, differences. You know, if you recorded $100 check in your books, but it got deposited as 110, first you have to verify, well, which one was right. Is the 110 the correct value? You just posted it wrong, or was the $100 correct and the bank just did something wrong? And you have to figure out something along those lines. Usually the bank is right, but in any case, you have to reconcile those and be able to do a beginning balance list of adjustments to an ending balance on both bank and book. Make sure that they tie out so that you have all your reconciling adjustments, and then you have to journalize those, right? And so this, you'll definitely want to make sure you have bank reconciliations down. Otherwise, you'll miss a few points on this. And you know, if each chapter has, what did I say, 5 questions, you know, 5 out of 60, that's almost 10% done. If you can't do bank reconciliations, you can guarantee you're not going to get an A. Let's see, chapter 6. Okay, chapter 7, all bad debt related stuff, usually along the allowance for doubtful accounts approach, but you also need to make sure you understand the direct write-off method and how you work through that. Now, we've done a couple of that pretty recently, so you should be able to look back at some of the videos and familiarize yourself with that. But you also want to make sure you understand how notes receivable are calculated. They're very much like notes payable, but how do you calculate interest? How do you calculate it on a daily basis so you can split it? If you have interest being earned over multiple periods, how do you record the interest in one period versus the interest in another period? How do you calculate it first and then record it, right? And then how do you record the payoff of a receivable? Let's see if there's anything else in here. And so that was 7, 8, all about capitalization, right, of an asset. Now, that's beginning to end. When you buy an asset, how do you book the value? What's included in the cost of an asset? Usually, they're going to focus around building, you know, lands, building. They're going to test you on that. A little bit on equipment. Equipment's the easier part, but land and buildings is a little bit more difficult. So you definitely want to go back and understand what components of cost go in to the capital value or the net asset value of a particular asset type, lands or buildings. How do you compute depreciation? They're pretty much just going to walk you through a straight line method. I don't think they're going to do a double declining or any other type of method, but you will want to make sure you understand, you know, what's the basis, or what's the cost of the equipment, what's the useful life of the equipment, what's the salvage value of the equipment, how to do the calculation on that to come up with anywhere from an annual depreciation value to a monthly depreciation value, and what you may have to do if it's only a partial month that you're starting with. So that gets into this. Let's see. You have your revenue versus, excuse me. I want to say this is supposed to be probably an expense. So when do you expense something versus when you capitalize things? That gets into that extraordinary repair type of a discussion. Extraordinary repairs are capitalized, whereas regular or routine repairs are expended or recorded as an expense. We got depreciation, we already talked about that. Your book value, oh, definitely gain and loss on disposal of asset, right? So if you bought an asset for $100,000, you depreciated it for 3 years, and then you had to ditch it, right? What's the loss on that? Or if you sold it, is there a gain or a loss on it? So you'll want to make sure you definitely walk through the disposal of any asset and determine whether or not you have a gain or a loss on it. Okay. I definitely understand the difference between amortization and depreciation. Really, they're basically the same fundamentally in terms of how you record them, but an amortization is related to a intangible asset, whereas depreciation is related to a tangible asset. And then you got chapters 9 and 10, which we're working through right now, which is largely associated with liabilities, and 10 is associated with long-term liabilities, right? Short-term liabilities and long-term liabilities. So you're working through that now, and should be okay in prep for that. And then the chapters that were dealt with a little earlier in the semester, which were your cash flow statements. And this one, which probably tripped up a lot of people, which is common stock, right? How to record somebody's investment in cash versus an investment in like a building. If the par value of the stock that they're buying is, let's say, $1, but they're putting in $1.50 per share, how do you record the amount over the dollar, over the par value effectively, which goes into paid-in capital, right? So you're definitely going to want to make sure you understand the paid-in capital, the kind of the equity side of the recording. Statement of cash flows, definitely operating activities versus investing activities and financing activities. Now remember, these really fall down along the lines of where accounts usually show up, right? So an operating activity account almost always shows up on the income statement. So it's going to start with net income and adjustments to net income, or is it going to just go through actual cash associated with revenues and expenses, okay? Investing activities is going to take you into the asset side of the ledger. Usually it's going to be equipment investments. It's going to be stock investments. It's going to be intangible investments. It's going to be on usually the asset side of things, whereas financing activities is usually going to be on the liability side of the equation. So your cash flows really can be broken up into income statement, asset, and liability type of accounts, and the changes in value over time and how that impacts cash. And I think that is a quick review, all right, of what you're going to be hit with on the exam. So remember, you're looking at about 5 questions per chapter, which means you're going to have to go through not only this, this review, but also the cheat sheets on McGraw-Hill, which will give you kind of the essence of what was being covered in there, and just make sure you have a good feel for each of those. I hope that helps with the exam. Remember, I also have these tips. They're pretty generic and simple, but I'll bring them up anyway. I always think about this as being kind of the easy stuff, but I guess it's the simple and small things that make the big difference sometimes. After all the preparation that you do, if you don't get these things down right, you're just going to make a mess out of it. And usually, it comes down to, in my mind, okay, the study part, everybody knows. That's the easy thing. Study, take some time, prep for it, go through the material and just refresh yourself, chapters 1 through 12, right? But these other ones often are overlooked, right? I'm not getting enough rest in the first place. So how am I going to be able to concentrate and feel energized enough to get through the exam, stay focused in it? If I'm hungry, haven't eaten enough, or if I overate, maybe I should put down here, don't overeat. But if I don't have enough energy to feed the brain and everything else, how am I going to get through an exam that's going to be very, very, I don't know, strenuous, right? So you need some food. You need rest, you need food, and you need to be comfortable, right? Make sure that you're wearing something comfortable. You're in a comfortable chair if you can. You're on a comfortable desk. You're in a quiet location where you can focus. Right? These are the things: rest, eat comfortable, and finally pray. Rely on the Lord. Right? You've done everything you can up to this time. You've spent at this point almost 13 weeks in this very, very difficult class, and you can't do it on your own. Nobody can do it on their own. And so going in with a humble attitude, relying on the Lord to help bring things to mind, to help connect the dots for you in this final exam is going to be really, really important. And then the rest of this is just, in my way of thinking of this, is just tricks of the trade in taking tests. And I've taken a ton of tests, as I've mentioned before. And I find that I pass these tests because when I've done this first part, but really I work through the rest of this pretty well. I always know that if I find what I'm looking, what the question's asking, and I focus in on that, remove all the distractions in the write-up, and I focus on just what the question's looking for and pick out the relevant information, then I can get to the answer a little bit quicker. I always work it out in some format, either, in the past it was always on paper, and you can definitely use Excel or use something, the whiteboard, if you have, the functionality of the whiteboard on your screen or something like that. You're going to definitely want to work it out. Use your T accounts for your journal entries, double check your work, review the answers, right? And remember that almost always 2 of the questions are going to be absolutely false. And the other 2 questions, obviously one's right and the other one's so close to right that it could actually be right. And so you have to be able to quickly eliminate the ones that are incorrect, right? Eliminate the incorrect answers and then focus in on the correct answers and make sure that whatever you came up with matches one of those 2 answers. If it doesn't, then you probably did something incorrect in your solution development. So you're gonna have to go back, double check your work, come back and see if it matches one of those 2, and then choose the right one, obviously. But if I think I've mentioned all that in here. And also remember that there's almost always one that's a distraction as part of those last 2. It's going to throw you off. And that's why it's very important to work through the answer first, so that when you get to the 4 that are there, you can eliminate 2, eliminate the 3rd one, and then just focus on the right one. So, and probably one of the most important ones that I've always taken to heart is if you're taking too much time, if you're taking more than 2 minutes on one of these problems, except for maybe, let's say, LIFO or the bank reconciliations, those are probably ones that may take you, let's say, 5 minutes. But if you're taking more than 2 to 5 minutes on any question, you're going to get frustrated. So walk away, not really walk away, but go on to the next problem and just continue through those, and then come back to those ones that you didn't work, that you didn't finish, and do those at the end, so that you don't overly frustrate yourself on one problem and then get to the other ones and are just drained and unable to work through them appropriately, or feel like you're being rushed because you're now on a deadline. It's better to miss that one that's taking you 5 minutes and get the rest of the, let's say, 40 right, than it is to and get it done on time, than it is to take a half an hour to an hour to get that one done and then completely be frustrated and out of time for the rest and get the 40 wrong, right? So just keep that in mind. Don't take too much time. I'm saying 2 minutes is probably the max on each of these questions. 5 if it's LIFO or bank reconciliation related. The rest should be pretty straightforward, and you should be able to do them within a couple of minutes. All right, so that's that. I'm gonna stop on that review and I will